So that is how I read support and resistance. You get it. But we'll reserve that lesson for another time. Let's just go and analyze this pair. Okay. So how do we find the market structure? I told you a bearish and a bullish candle form support, right? Are you with me?
Yes, very well. Very well.
Okay.
I'm with you.
So a bullish
Thank you.
candle and a bearish candle forms support. So for me,
Okay.
this is a level. And as we were going up, this went here, came here. So for me, we didn't break this level. We didn't break this level. You see this level? We couldn't
Yes.
break it. Yeah. So as long as we couldn't break it, we were still bearish. Then from this level, we broke it and formed a higher high. And from that higher high region, we dropped to break this level again. So we are bearish on the weekly. So this will be my lower low level. And I want to see this only on the weekly so that it does not confuse me when I'm on the other time frame.
Okay.
So this will be my my lower high, because we formed the new low. We formed the new low. So we will say we are bearish on the weekly. We are bearish on the weekly. Lower high, I label it so I don't get confused, and I make sure I see that only on the weekly. And this is my lower low on the weekly. So, but you see, if you are looking at it from this angle, let's say from this angle, you are likely going to say this is bullish.
Exactly.
You get it. You're likely going to say this is bullish because you broke this level and made a new high. You get it. But if you are reading price action like I read it, then you know that this is the last higher low that formed this higher high. This higher high was formed from this level. And once this level has been broken, this becomes bearish. So we are done. That is all that we want to do on the weekly. That is all that we want to do on the weekly. So we are done. We've seen the direction on the weekly. We are bearish. Then we come to the daily. Now what I'm doing is that I'm trying to find the direction of the market so that I will know from where to enter my trade, or from which direction I'm likely going to anticipate that price will go to. You get it? So we've seen that the weekly is bearish. It's bearish. And you know, it just changed character. It just changed it. So it means that we can ride this for a very long time. We can swing this. But when we come to looking at entries and where to, we'll talk about that. So we come to the daily, and without talking much, we can clearly see
bearish.
This is bearish. Good. You see how simple this strategy is. This is bearish. So I want to be sure we see these only on the daily. So I take it off on all the time frames. I clone it and bring it to the lower low. If you want to make sure you can use the line chart to check if you've gotten the levels right. Because sometimes it can close below it by a very small number of pips. And if you are not careful, you will get the direction wrong. Because we have to trade with the trend. The trend, they say, is your friend. And you wouldn't want to trade against the trend. So on daily, we are bearish. And on 4 hours, we are bearish too.
Yes.
I hope you are seeing it.
Yes, very well. Yeah.
So let's be sure we see it only on the 4-hour chart, the hourly charts. We clone it. And then, so we have our lower high. And our lower low. I always want my charts to be very clean. Very clean. So now that we have identified the direction, we know that price is going to drop. We don't have any business trying to buy this market. Although we can, but I don't want to trade against the trend. I want to trade with the trend. So what I'm going to do is that we need to find where can we sell from. That's why we identify key levels. You get it. So this is our first key level. Yeah, remember we are always looking at the closing price. So currently price is at a key level. Price at the key level. Let's look at the 4-hour chart. Then we can adjust it on the 4-hour and say this is also a key level on the 4 hours. So we'll adjust it to that. But then we have to look at how price has reacted at that place in previous days. So yes, but the reactions are not so good. You get it. Although in recent times, this 1, 2, 3. 1, 2, 3. Let's go to the daily and see. Let's go to the daily and see. Perfect. See. 1, 2, 3. See all these reactions. See all these reactions. You get it. So yes, it is not exactly at the daily level, but just above it, there is another daily key level. And now we want to go for that key level, which is this level. You get it. Since there is a key level above that 4-hour key level, the possibility that price will go to that key level is high. So let's see. Perfect. Look at how it aligns on the 4 hours. And you know, I told you the other one was not so good. Look at how perfectly this is playing out. See, 1, 2, 3, 4, 5, 6, 7, 8, see, 9, 10. See.
So strong.
See how
so strong.
Price is respecting that level. See how price is respecting that level. Wow, that's so perfect. So then I'll draw my zone from that level. How do I draw my zone? I draw my zone from the key level to another resistance, since I'm going to sell to another resistance point. So it's going to be from where I drew my key level here to this, which is the 4-hour lower high. You get it. So let's extend it and see how price reacted towards that zone in history. Let's come to our bar chart. Now see how perfectly it aligns. Just watch it. Just watch it. Now that we've drawn the zone, just look at it. 1, 2, 3, 4, 5, 6. I will meet it a lot back. 7.
Yes.
Yeah, so to pick this trade, you just take your distance, put your entry at the key level, and your stop loss just above the 4-hour lower high. Maybe 20 pips will do. 20 pips from that level, and that is 1:9. That is 1:9. So even if you risk $10, you are making a $90. But like I told you when we had our chat, I don't go above 5, 1:5, 1:4. This where price is likely going to get to, but I'll pick my take profit maybe somewhere here, 1:5.3. I'm done. And you know, we can pick this trade. We can pick this trade because price is getting towards that level.
Exactly. Yes.
Yeah. So there are 2 ways that we can do this. One, we can wait, we can set a pending order so that once it gets there, it triggers it, or we can wait for price to get into the zone, and then we will narrow into the 15-minute and look for pin bar or an engulfing candle, giving us a rejection from the zone. Then we'll enter from that level. So that is that. Now the GJ has come back to the entry. I told you I picked it with a 15 minutes confirmation, and this was the candlestick that I used. You see this 15-minute candlestick, this 15 minutes engulfing. Yeah, that is what I picked. Yeah, so I picked it from here, put my stop loss just above this place, and I took 1:4. Yeah, I think that was it. My stop loss was somewhere here. Yeah, 1:4. That was it. And that took less than 2 hours to play out. Yeah, 1, 2. It's like just less than 2 hours. And after that, it has come back to the entry. It doesn't mean we are wrong. We can still enter from here if we get at this, because this is where price is likely going to come to. You get, but I'm done trading that.
Yes.
I'm done trading that. So that is how simple it is. Being able to read a market structure and being able to determine or identify your key levels. That is all. Forex doesn't have to be difficult. Forex doesn't have to be difficult. So that is that. I don't know if you have any question based on this analysis, or you've seen any observation that you want. I don't want, because I'll put it on YouTube, I don't want it to be too long.
Exactly. Yeah. No, this is perfect. Yeah, that's very, very simple explanation and straightforward. Very,
yes,
very
and there
key.
is a way I also use trend lines, although I don't use trend lines that much.
Okay.
I don't use trend lines that much, but we can draw this trend line. For an extra confirmation. You see? You see where the trend line coincides. Just at the zone. Just at the zone. People draw trend lines in various ways. You get it. But I use the closing price. And that is why, because I was teaching you, that's why I use the line chart so that you see how I do it. But maybe when we have another lesson and there is a need for me to talk about trend lines, I will do that. But I don't usually use trend lines. Anytime I will use trend lines just to get an extra confluence. You get it? So,
Okay.
and
Yeah.
they say that the third touch of the trend line always does the magic, right? So this is the first touch, this is second touch, and we are heading towards the third touch. You get it.
Wow.
So
This is an eye opener.
with a trend line, you see, and that is why you should train your eyes to see. See, there's another key level here. I'm just going to draw it. So the trend line brings in extra. So there's another key level here. Watch this. On the 4 hour. You see this key level. See where the cursor is.
Mm-hmm.
You see this,
Yes,
this level. It meets exactly with the trend line. Let's check where it is on the daily. If there is a level on the daily. Okay, there is another way, another set of levels that we call the open close level. The open close level is that when you have two bullish candles, where they meet, it's a level that you have to watch. It's a key level. So here, let me show you. It's like I'm putting all of them together. It's just because of the analysis for YouTube. I will talk about, see, this is a bullish candle. And there's another, sorry, this is a bearish candle.
Bearish candle.
And there's another bearish candle. So where the first bearish candle closed and where the second bearish candle opened is what we call the open close level. And that is also a level that price respects. So that 4 hour key level, this 4 hour key level happens
also coincide
to be
with that.
an open close level on the daily. So we can use that key since that has an extra confluence with the trend line. We can decide to use that key level instead. You get it? And then our stop loss will be above the trend line. And then we can target this place. But yeah, that's it. I usually don't want mine. So let's do 25 pip stop loss. Yeah. So with this, we can set our pending orders and wait, or we can wait for price to maybe test the trend line, give us a 15-minute pin bar or a 15-minute engulfer, and then we pull our trigger, and then 1:5. That's it. You see how simple and how beautiful it is.
Very beautiful. Very, very beautiful.
And very clean. And that is the name of my channel, Kenas. Keep it neat and simple. Keep it neat and simple.
Okay.
That is Kenas. Keep it neat and simple. It has to be neat and simple. Because sometimes when you have too many drawings on your chart, you end up getting confused. You get it. So that is that. I don't know if you have any question. Let's see how this will play out. Let's see if this will give us some money. Although I'm done trading for the day, but this looks too tempting. So I'll risk maybe 1% of the profit I made today on this trade. Because we are still in the New York session. Yeah. We are still in the New York session. So let's see. Okay, so
you mostly trade the London session.
I do the London session and the New York session. Yeah. I do the New York session and the London session. Yeah. So I avoid the Asian session because most often they consolidate. Although there is a strategy for that, where the Asian session can help you with your entries, especially when you are trading Euro USD.
Oh.
Yeah. You know, I have strategies for various pairs. This strategy is for every pair. You can use this strategy for every pair. You get it. But I have a strategy.
This is clean. Very, very clean.
Yeah. You see the Euro USD that I analyzed yesterday is playing out. It's playing out. GU. No, GU is also playing out. Is also playing out. So let's see. Okay. For us not to make the video too long, I'll have to end this session.
Yes.
And then
yes.
Yeah. So stop sharing.
Lovely. Thank you so much. Thanks.
Welcome. Welcome.